order to change a human being into this.
Long voyage.
95 days in the Ivory Coast.
Into this.
That system is our enemy. Is our enemy. Our enemy.
Yeah, well, a couple of points. Note on contrarianism, and then another note, which I forgot. But anyway, on contrarianism, you know, the people that were buying into commodities in 2008 were saying that they were buying into a contrarian view, even though, as it turns out, they were being sucked into a very, what's called crowded trade. Now, a crowded trade is the opposite of a contrarian view. But if you listen to Financial Sense NewsHour last year, they would say, you know, this is a contrarian view. The mainstream media doesn't understand the commodities market, doesn't understand the forces of inflation, as they described it. All this money that's being jammed into the system, we're seeing it in the rise of the price of oil. Now, that was a narrative that proved incorrect on several fronts. Let's walk the cat backwards, so to speak. First of all the money that was being pumped into the system means nothing unless you have velocity. In other words, you could pump 10, 20, 30 trillion dollars into the system, but unless banks are willing to make a loan, any kind of a loan to anybody, it's not going to show up as inflation. So, so far, the banks are simply hoarding cash. They're not lending it out, and this is why we don't see the inflation that you would normally associate with the money printing. Now, what Mish says, and what guys like, who is it, Stephen Keen in Australia,
yep,
and other deflationists will tell you, is that the description of the economy responding to inflation due to money supply growth are failing to include credit supply growth, so that the argument of inflation and deflation, which most people erroneously characterize as the increase or decrease in prices of stuff, not realizing that that's the symptom of the true cause of inflation, which is money increase or decrease on the wholesale side, on the industrial side, fail also to include the other component, which is credit expansion and contraction. And this is where the negative reserve model comes in, or the zero reserve model comes in. In other words, going back to the 1920s and early 30s, if there was an increase in money supply, it would show up as inflation because the dollar was pegged to something like gold, so you had something to compare prices to. But if the entire globe is trading in negative equity, if there's over a quadrillion in credit and debts out there versus a GDP of 50 trillion for the entire world, then we're in negative space. We're in a negative economy with virtual currencies. And so just by increasing the amount of so-called money supply is not going to translate into price inflation, because that is not money, that's more debt. And if you're increasing debt, you're increasing the deflation. So in fact, the people who were calling for inflation in 2008 were diametrically in opposition to the truth. Now, again, the bottom line here is to look at how the portfolios of those people involved are doing. Shedlock's portfolios were in positive territory by double digits, and the inflationist portfolio were negative by 50%, and that's one of the sharpest spreads you could ever imagine. It's like saying somebody is dead wrong, the inflationists, versus somebody who is irrefutably correct, the deflationists. Now that's the 2008 story. Now, as far as 2009 goes, you had the bounce in the banking stocks that was the result of this money creation, and this is gave rise to the hope of there being a resumption of the bubble economy that was going to cause everyone to get bailed out. But looks like with China now going back into the toilet, that the forces of deflation could once again be upon us. And I noticed, Stacy, that there's a lot more talk in the Financial Times yesterday about more governments moving to negative interest rates, which means that and banks, which means that the cost of having money at the bank, actually, instead of the bank paying you to keep money on deposit, you have to pay the bank